Hello everyone. How are you all? I hope you all are good. Today we are going to start with GST. But do you think that you can start the journey on GST without understanding what is indirect tax? Because GST is an indirect tax. So we will need to understand it very well that what is this indirect tax? But before that we need to have a clear understanding of what is tax. Because whenever we listen the word tax, we generally feel that the government only wants to collect the taxes for increasing their revenues, as they only think to increase revenues while collecting taxes. No, it is not the case. India is a socialist, democratic, and a republic country. So in such a country, whenever we make laws, be it any particular type of law, then we ensure that the law must not impact or affect the foretold three things I stated for our nation. Right. So let's understand these things one by one, starting with basis for taxation. India is a socialist, democratic, and a republic country. I hope you already know, but still I will elaborate that what socialist means. So India is not a capitalist economy. Our nation has an objective which states that no one should face discrimination, be it rich or poor, and it must be possible for everyone to survive. That we must make laws keeping in mind the rich, the poor, and everyone else. So whenever we will frame the taxes, we must do it in a way that shouldn't significantly impact the poor, because their survival is also extremely important. If we start collecting taxes equally in same amount from everyone, either they are rich or poor, then don't you think life will get tough for the poor, their survival will get difficult, and sustenance will be challenging. We must ensure it all while making laws. India is a democratic country. It means that we, the people of India, have the right to choose our government, that it is in our power to select the government. Alright? And the ones we choose, they get the authority to exercise all the powers. That means republic. Here, republic means that the elected people will have all the powers to rule the country. Right? So basically, a republic country altogether means that the government which is elected is by the people and for the people. Okay? And in our country, the Constitution of India is supreme law of land. The highest and the most superior law of our country is the Constitution of India. Only if the Constitution of our country allows to make a law, in that case the law can be made. There are various ways through which they are collecting taxes, such as income tax and GST. You know why they are able to collect it? Because our Constitution allows for a law to be made called the Income Tax Act that gives them right to collect taxes. If it wasn't mentioned in the Constitution, then there would have been no income tax law. GST is a new law that came into effect in July 2017. Do you know what had to be done before the GST Act was made and even before its law was made? The Constitution was amended. An amendment to include this was done in the Constitution, as a result of which law of GST was made, and it was empowered to collect taxes. If the Constitution had not given this power, can the government collect tax through GST? No. What I wanted to tell you is, before you understand any law, you must understand that the supreme law of the country is the Constitution of India. So the highest law in our country is the Constitution of our nation, and only when it gives the power, then only a new law can be formed, otherwise it won't be formed. Whenever Constitution gives power, then a law is made to collect taxes. Look here. All other laws including Income Tax Act, Central Goods and Service Tax Act are subordinate to the Constitution. These are all subordinate, they are within it. Right? The Constitution provides that no taxes shall be levied or collected except by the authority of law. The Constitution provides that no tax can be levied, and also that no tax can be collected except by the authority of law. That only if the Constitution will give authority. Only in that situation a tax can be imposed on public and then collected. I hope you are aware that there are only two types of taxes, direct taxes and indirect taxes. And the direct taxes only includes one single tax within them, that is income tax. Right. So what does income tax mean? It means taxes applied on income. The income which we earn and the taxes which we pay on that income is called the income tax. Before the year 2014, there used to be another direct tax which was called the wealth tax, but it no longer exists. In 2014, Arun Jaitley was our finance minister, and he introduced to abolish the wealth tax in budget of 2014. This was the same time when Modi ji's government came to power, right? So, it was the first tenure of Modi ji's government, as in the year 2014 it was the first time that Modi ji's government had come to power and Arun Jaitley became our finance minister and abolished the wealth tax. In fact, we can also say about the government that it has abolished a lot of taxes and is focused on reducing the total number of taxes that are imposed, right? If they have reduced these taxes, they would have increased their revenue from somewhere. It's not that they incurred a loss on revenue. What did government do? See, there is surcharge on income tax. It is a tax on tax, there is a provision for surcharge. So it was increased, okay? They thought that they will collect surcharge from people. Hence, they can abolish the tax known as wealth tax. Although today you do not even need to know that what this wealth tax was. But still a small reference is required for you to understand that before 2014 in the direct taxes, two types of taxes were present and how they functioned. In income tax, the income we earn, as this year I earned 10 lakhs, I will pay tax on 10 lakhs. This is income tax. Wealth tax means that what my accumulated wealth exactly is, such as I earned 10 lakh rupees out of which 4 lakh was spent. So my wealth today is 6 lakh rupees. Right. The next year I earned 12 lakhs rupees. So next year I would have paid taxes on 12 lakhs. Now out of that 7 lakh were spent and 5 lakh left. My wealth became 11 lakhs as we combined the 6 lakhs and 5 lakhs from previous years. So what is wealth? Whatever accumulated wealth was there till date. Tax was levied on that. Every year you pay income tax on earnings. And the total wealth you have created today, there was a tax on that which was wealth tax. Right. Now, what is indirect tax? These are the taxes levied on goods and services. Alright? Indirect taxes include GST or customs duty. I will tell you a bit about it. If you are planning to purchase goods, within India, GST is imposed on it. If you are purchasing some services within India, I hope you understand difference between goods and services, right? Products such as shampoo, soap, detergent, surf, all are goods. You are taking coaching classes from me. What is this? A service. Right? So you buy goods, you pay GST on them. You are taking any services, you pay GST on them. You stay at a hotel, so that is a service as well. You took service, not bought goods. Now outside India, let's say if you have purchased some goods, so in that case you have to pay customs duty. In India, we pay GST on goods and services bought and for things bought from outside the country. Like when we buy goods from outside, we need to pay customs duty. But if we buy services from outside India or if we get a service from someone outside India, then you know what we pay? We pay GST, goods and service tax. We'll cover the topic of GST later in detail. Here, I just wanted to explain direct and indirect taxes. Is the difference clear to you now? The tax levied on an individual is called direct tax. It is levied on a person. And this indirect tax is levied on what? On goods and services. When tax is levied on an individual, that person directly pays it to the government. When a tax is levied on goods and services, we do not pay taxes directly to the government. We pay taxes on the goods and services from whom we procure or buy. We pay the tax to them. Then that person directly pays tax to government. Listen again. What's a direct tax? Tax levied by government on people, this is government. When I look up, then just understand that I mean government. Okay? When the government imposes income tax on me, I pay the tax to the government, I say please take it. Indirect taxes are levied on goods and services. We paid tax to the person we bought goods and services from. I paid for the goods, the service and the tax, making a single payment to the same person. Then he pays those taxes to government. Please pay attention, I paid the tax, but it did not directly reach the government. It reached indirectly through me. Trader acted as intermediary, delivering tax to government. Therefore, it is called indirect tax. I told you that there are many types of indirect taxes. The direct taxes only have one tax, income tax. Before 2014, there was wealth tax which got abolished. So you only know one tax in direct tax, which is income tax. And there are many indirect taxes. Primarily, what do we have to study about? GST. But overall, you need to understand the basics first. With that overview, now we are going to do GST. You understood what is custom duty and the rule of GST. There are many other miscellaneous taxes, such as motor vehicle tax, okay, and then electricity duty. Then stamp duty. What's motor vehicle tax? When buying a new car, you may have likely heard about paying RTO fees. What are these RTO fees? I mean, if you buy a car, you're only going to drive it on the road, right? Who built that road? The Indian government did. It is providing us with a valuable service by building such roads. You need to pay taxes for this, so that is called a motor vehicle tax. They are paid to the government. Electricity duty. Have you ever checked electricity bill? If you haven't seen it, check it today because we will do everything very practically. When you look at your electricity bill, the bill shows how much you have to pay. Below that, there is something called electricity duty. Government is taking tax. Stamp duty. What is stamp duty? It is the charge you pay for stamp paper. You buy stamp papers worth rupees 200, 500, 1000, even in lakhs. These are the taxes you're paying to the government and not the paper money. Okay, that paper is worth 2 rupees, right? Through that tax, the government gets money. There are certain other indirect taxes in addition to the list of taxes that I have already mentioned. It is not necessary for us to know and learn the names of a lot of taxes because right now our primary focus is on only one thing. GST. You know, before 2014, people used to say, if we earn, then tax will be levied. And if we save money, even then tax will be imposed. So tax will be imposed if we spend money or save money. Oh my God, what does it mean? Okay, let me explain this. A person who's focused on earning money, okay, he uses some of it for spending on things and saves some. This is the way. The one he earns is the income. And what do we spend on? Well, obviously we spend on goods and services. We buy goods, we buy services, and we spend money on them to fulfill needs. And whatever amount is saved, that becomes my wealth. As of this date, what I save is my wealth, it's my capital. So the law that was there earlier, see how peculiar it was. We used to pay income tax on what we earned. If we spend that same amount of money, then we used to pay indirect taxes on goods and services. Okay, and whatever we were able to save, we used to pay wealth tax on it. The public said, what kind of government is this? Tax is there if we earn taxes on spendings and tax will be collected if we save money. Various taxes. So in year 2014, current government abolished this policy. This particular law was abolished. Right? So today we have to pay taxes on income and expenses. There is no tax on savings. So if you have to write it, you can write in short. The taxes known as direct taxes are levied on a person. Levied means to impose. This is a new word you have learned today. Levied on person. And the indirect taxes are levied on goods and services. The second important point is, who pays? Under direct taxation, tax is paid by the person on whom it is imposed. Indirect taxes are levied on goods and services, not people. But who pays it? Consumer, the one who buys the goods and services, pays the tax. Okay? And who pays these taxes to the government? The one who sells these goods and services. Since we are the consumers, so we would pay the taxes to The person from whom we have procured the goods and services. The seller of goods and services. We will give it to them and they will give to the government. Please remember this entire system. Direct taxes and indirect taxes. Direct taxes, they are imposed on person's income. Direct tax charge is on person concerned, and the burden is borne by the person on whom it is imposed. The person on whom direct tax is imposed bears the burden and pays the government. Whoever it is levied on will bear the burden and pay to the government. Okay? Indirect taxes are levied on goods and services. But the one who bears the burden doesn't pay directly. The trader will give it to the government, consumer will take burden. Consumer pays to trader and trader pays to government. Okay? Tax will be applied to goods and services. The immediate liability to pay this tax falls upon the supplier who has to pay the tax to the government. And who will bear the burden? The burden is transferred to the ultimate consumer. The burden falls on the consumer. One that consumer bears. Okay? Let me tell you. Like this. On whom will it be imposed? Right? Burden. Let me write the spelling. Burden. On whom will it fall? On whom will it fall meaning levied? Since these terms are related to taxes, I am afraid you might forget this, especially as this is your first class. Who will bear the burden in this context? And third is who will pay? Okay? The government will be paid by whom? Have you understood this? Now we have to tell you three things. What happens in direct and indirect tax? Okay? On whom it will be applied? On the person on whom the burden will fall. On the person. Who will pay to the government? It will be paid by the same person. Now you will understand when I clarify and break down the three components. It will be levied on who? Person. Who will be under the burden? Same person on whom it is levied. Who will pay to the government? The same person. Okay, now. Indirect taxes will be levied on what? Goods and services. Who will bear the burden? Consumer. Who will pay the government? Supplier. Is the supplier paying from their pocket? No, it's the consumer who is bearing the burden of the taxes and hence he is paying. But consumer is paying the supplier who is paying government. Now if you know these three pointers separately, then you understand what is the difference between direct tax and indirect tax. Features of indirect taxes. Let's understand what are the various merits of indirect taxes. Government needs funds for various purposes. Why does the government collect taxes? Well, the government has to run the country's economy. It has to maintain law and order, defense, social and health services. For this, government needs money. From where do you think the government gets its money? The government gets money from four sources. Number 1. Government companies' profit. Number 2. Loans from World Bank. Number 3. Disinvestment. And number 4. Taxes. However, what is the biggest source? Taxes are the most significant source of revenue. Profit from government company, it also does business, and earnings from it are source of revenue. I will tell you one thing, and it's important. Government companies are primarily in loss. The profit is very low, and even if there is profit, it is very nominal. So this source is negligible. I know it didn't surprise you. You must have an idea that government companies doesn't earn much. Okay, loan from World Bank. So in our country, the budget is made. Do you know what a budget is? It's an estimate of revenue and expenditure. How much will the country's revenue and expenditure be? Do you know this fact that the budget that is presented is entirely a deficit budget? That means every year the budget that we create or the estimates that we make, we estimate it higher than our revenue. In other words, our country spends more than it earns. Oh my God, just think about it. If your father earns rupees 100 and your family spends 110 rupees, our family runs like this. Is that possible? No. But my country runs in this pattern. Since independence in 1947, India has always had a budget deficit, meaning the government had already planned to operate with a deficit. You know how this deficit is covered? By taking loans from World Bank. So here the government realized that the yearly earnings are 100 rupees and the expense is 120 rupees, so take loan of 20 rupees from the World Bank. Our country runs like that, and we are paying a very large amount of interest to the World Bank every year. Right. Third, how does money come to our country? Through disinvestment. Disinvestment means that government sells stakes of a government company. The shares of a government company are then sold outside, meaning to some private buyers. Clear? As you've heard many times, Rahul Gandhi claims that this Modi government is selling the country. Have you ever heard this accusation before? So they claim that country is being sold, meaning government is selling shares of government company. Okay, the government is selling something over which it has the right to do so. So recently the government announced IPO of LIC. People know LIC is government company. So what government did regarding that? They sold its share to the public. Thus, this is one way for the government to get money, and the fourth is taxes. Right. Tax is a continuous revenue income that keeps coming continuously, and this is a major source for the government. Government obtains funds from various sources, out of which one main source is taxation. Let's talk about the difference between direct and indirect taxes. Direct taxes are those taxes where the incidence and impact falls on the same person. Incidence and impact both fall on the same. Incidence means liability to pay. Impact means burden. The burden is borne by the one on whom it falls, and so he pays the tax. We know this, but this is not the case with indirect taxes. The burden falls on the consumer. And who pays? The supplier pays the taxes. Okay. Indirect tax is a tax where the incidence and impact of tax fall on two different people. Incidence will be on someone else and impact will be on someone else. On whom the incidence will come on? Liability to pay, supplier will be liable. The impact or the burden falls on whom? It falls on the consumer. Direct tax is progressive in nature. Those who have read about income tax will relate to this very well, but those who haven't studied, they will have to try to relate to me. Direct taxes are progressive. It means the richer someone is, the more tax they pay. Have you observed that our income tax is levied slab-wise? There is no tax on certain income. Then the tax is at a lower rate. Then it increases slightly, followed by another rise, and the tax rate continues to go up further. No tax is applicable up to a certain level of income, after which you pay 5%, then 10% and 15%. Those who haven't studied it should understand on their own that this is how income tax works. But indirect taxes are not like that. Indirect taxes are regressive in nature. It doesn't matter whether you are rich or poor. Whether you are wealthy or not, it remains the same. If we buy a shirt, the tax amount will be the same regardless of financial status. If we purchase a car, everyone pays the same tax, whether you are rich or poor. But with income tax, those who earn more are subject to higher tax rates. A person with a lower income might be paying 5% in taxes, while someone with a higher income is paying 30%. If someone earns a very low income, they may not be liable for any tax. But this is something being said. But I'll tell you a deeper thing. It's more intricate, right? And don't get confused then. In my opinion, our country is a socialist economy. Let me provide a more detailed explanation of the first line I introduced to you. We started from here, right? India is a socialist country. Our country is a socialist country. We do not collect the same taxes from the rich and the poor. You might wonder that, sir, you just mentioned that both the rich and the poor pay the same tax on shirts. Actually, if you notice that, the government imposes low taxes on items used by both the wealthy and the poor, especially which are used by poor. The government does not charge any taxes on basic necessities which even the poorest person would buy. Do you know how much tax is on a milk packet? 0. Why? The government knows regardless of a person's wealth, everyone will buy it. The tax imposed on the everyday goods and services that you buy is typically very low or may even be non-existent altogether. Where is government taking high taxes? Luxury items. The tax on air conditioners is elevated, the tax on large televisions is also higher, and also on cars the tax is very high. Tell me one thing, who is buying all this? Rich people are buying it. If a poor person can't buy these, where will he pay tax on it? The government claims that indirect taxes are regressive. We also study it the same, that everyone will pay same amount of tax regardless of income. We should understand that low-income individuals do not purchase items with high indirect taxes. Am I right? It's the rich paying the tax. Do you understand what I am trying to say here? As I said, the government applies indirect taxes uniformly, charging the same amount for an item regardless of whether a rich or poor person buys it. However, I assert that the government does not impose taxes on goods that are purchased even by poor, or it's very less. And where taxes are charging more indirect tax when a rich person is making more purchase generally. If the poor aren't buying anything, how can they pay the tax? A poor won't pay taxes as he is not buying anything. So whether it is direct tax or indirect tax, the government gets more money from the rich. But obviously, we cannot make such a statement. This was just an example for you to get the conceptual clarity of this, okay? This is what I was trying to explain about socialist economy. Government has created framework of such laws, and this is not a capitalist economy where only rich will thrive. Everybody will live here, and those who have studied income tax must have understood from me that the government is framing laws in such a way that the difference between the rich and the poor minimizes. Of course, the government cannot take it from the rich and give it to the poor, but it's trying to do as much as it can through such laws. Right? For now, what you have to learn is that direct taxes are progressive in nature. Progressive means the more you earn, the greater the amount of tax you pay. Regressive means it does not matter whether an individual is rich or poor. An equal tax is called a regressive tax. An indirect tax on a specific item is regressive because it is uniform for all. If anybody buys, they have to pay the same tax on it. Taxable value, tax will be levied on which value? Income tax is levied on taxable income. Taxable income is subject to income tax. Okay. Taxable income differs from your actual income. It's the income that is subject to taxation. The income according to the income tax law. Your income is calculated because actually a lot of income is not taxed. It's exempted income. Therefore, your actual income is significantly higher, often many times greater than your taxable income. However, your taxable income is relatively low. This is because much income is exempted, so tax is imposed only on taxable income. Right? But there are instances when my actual income is relatively low, yet my taxable income appears high. Okay? Because we have spent the money on the business. We have subtracted that. I have received my income. Government and income tax law are saying this will not include under expenses. They don't accept it, so our income seems increased. If the government ignores expenses, then our income increases, raising my taxable income. So, income tax is levied on taxable income. Now you can understand that the income calculated according to the Income Tax Act is called taxable income, and tax is imposed on it. And indirect taxes are levied on what? The value of supply. The value at which goods and services are provided or offered to consumers. If an item sells for 100 rupees, indirect tax will be applied on 100 rupees. The value of the supply. Levy and collection. Who do we impose it on and who pays? Taxpayers, also known as assessees. Okay? So, levy and collect. Levy means to impose, collect means to take. Taking tax and levying tax are two fundamentally different processes. Okay, we levy and we take it from the assessee. And the tax will be levied on and collected from the consumer. Right? But one thing you need to keep in mind is that the government is not directly charging the consumer. They will charge the consumer, they will take it from the consumer, but the government will not take it directly from the consumer. They will take it indirectly from the consumer. Okay? But paid to the exchequer. Exchequer means government. Government is exchequer. And paid to the exchequer by the dealer. Dealer means supplier. They will impose tax on consumer collected from him, but indirectly, so who will they collect it from? From the supplier. Shifting of burden. Directly borne by the assessee, hence cannot be shifted. Is it possible to shift this burden onto someone else? No, not at all. The same person will bear it. Tax burden is shifted to the subsequent or ultimate user. See, who is paying taxes to the government? Supplier. Is the burden being shifted? Yes, it does not fall on him. It is passed to the consumer. Here, in the income tax, burden is on the one who is paying, but in indirect, burden is shifted. The supplier is paying the indirect taxes, but the burden is shifting to the consumer. When is it collected? After income for the year is earned. When the annual income is earned, then tax is collected on that. And when this tax is collected, at the time of supply of goods and services. Let's see further now. The disadvantages of direct taxes and the advantages of indirect taxes. Here, we will compare and explain in more detail why indirect taxes are seen as more favorable. The first issue is psychological. Paying direct taxes feels painful because you've earned the money and now you are required to hand over a portion to the government. It will be painful. With indirect taxes, we don't pay taxes separately. We pay them along with the goods and services. We don't even realize when we pay them. So, disadvantages of direct taxes. It is psychologically very difficult for a person to pay some amount after it is received in his hands. Hence, there is psychological resistance. Advantages of indirect taxes. Since the price of commodities or service is already inclusive of indirect taxes, the customer, that is the ultimate taxpayer, does not feel a direct pinch while paying the indirect taxes. And hence the resistance to indirect taxes is much less as compared to the resistance to direct taxes. Do you understand that the supplier psychology also favors it? When a supplier pays indirect taxes to the government, it does not feel the burden because it passes the cost on to the consumer. And why doesn't the consumer feel the burden? Since they think they are not paying for any taxes, they are paying for goods and services, for example. Suppose you bought a shirt, so you pay the taxes. Within the price of the shirt you have purchased for 2000 rupees, it includes the taxes on it. So, when you bought the shirt for 2000 rupees, you paid 2000 rupees to the supplier. You don't feel any pain because your price of shirt is 2000. You don't care how much tax is included in it. The supplier will now pay the taxes to the government. The amount of 2000 rupees includes the taxes, so it won't affect him. Why? The tax given to the government was collected from consumer and not from supplier. The supplier who collects taxes in his invoice and pays them to the government has a psychological feeling that he is only collecting the taxes and is not paying out of his own pocket. Direct taxes are mainly on the income of individuals, firms, or corporate bodies where millions of transactions are carried out in lakhs of places, and keeping an eye over all such transactions is virtually impossible. Every person who is earning in every street or place, and there are many people earning money everywhere. So, the government cannot control or see it. Right? And moreover, it is very difficult to collect taxes. So here it means to state that people who earn income, lot of them earn organized income. It means their business is visible and transparent. Some people are earning and working, but it's not clear. For example, one such group of individuals are contractors who provide labors for various construction works, and they also earn significant money. Okay, and they are earning lakhs of rupees a month, but their work is such that it is operated in cash. For instance, they supplied 100 laborers. The laborer may be paid 500 rupees per day, but he is charging 700 rupees per day from the customer. So, he is earning a good amount of money. With 200 rupees margin, he earned 2 lakh a month. Or perhaps for whatever period he worked for, But this work is so disorganized that the government is unaware of the earnings and works. As we know that people are earning money and they earn from all kinds of places, the government is clueless about it. Not every business is organized enough to be visible. So that's why it is not known. And keeping track of this and collecting the full tax is difficult. Now coming to indirect taxes, they are comparatively easier. Why? Indirect taxes are easier to collect as they are mainly on goods and services, for which record keeping, verification and control are relatively easy, at least in organized sector. Manufacturing activities are carried mainly in organized sector where records and controls are better, right? So indirect taxes are levied on goods and services. Okay? And if we discuss goods specifically, then goods movement begins with the manufacturer, then moves to the wholesaler, the retailer, and finally to the consumer. And moreover, the manufacturers are generally big companies. So when these companies sell these goods, it is easy to trace whether GST or any indirect tax has been applied to the goods or not. Now, if any manufacturer who is selling goods with GST etc. So when the wholesaler who buys from them, every purchase is recorded. And it means that purchases made are on record. The manufacturer has recorded sales and reported goods sold for this amount in rupees including GST. So, the wholesaler will be forced to make his sales in an official and legal way, thus, he will show the transaction. Similarly, retailer must also document the transaction. And when selling to the final consumer, he will pay GST collected. Actually, think of it this way. The government states that the goods and services produced start with the manufacturer, then goes from manufacturer to wholesaler to retailer and finally retailer to the consumer. And the source or beginning of the chain is controllable. They can keep an eye on it as manufacturers are big companies. It is easier for the government to monitor the manufacturer since they legally document and disclose all their transactions. So the entire transactional flow is legal. Even if the wholesaler wanted to, they cannot conceal the transaction. The purchase of goods by the wholesaler is officially recorded because the manufacturer is showing his sales and the wholesale purchase is visible. Can he conduct the sale unofficially? Can he claim that he won't pay GST and sell the goods in cash? No, if he doesn't pay GST, the government will inquire about the whereabouts of the purchase. So, he will be forced to operate officially. Is it clear to you? If you are unable to understand many things, then try to understand the outline. We are not trying to delve deep, but just trying to understand basics of indirect tax. Are we understanding these transactions in depth? No. Let us first get to GST. We haven't even reached the topic yet. So the government wants to state that it is difficult to accurately ascertain how much someone earns, making it challenging to control and collect taxes. But in indirect taxes, it is easier to control where it begins. And therefore, by ensuring control from the starting point, the entire chain will effectively function seamlessly. That's it. Tax evasion is comparatively more in direct taxes, where it is on unorganized control since control is difficult, so tax evasion occurs. Let's understand it. Actually, this means that attempting to save taxes illegally is tax evasion. And people try to save on tax illegally and do not disclose income. It says it's a bit difficult to do tax evasion here. Okay, so it's not that easy. As the government states it has better control here. That's why some politicians also believe that direct taxes require so much control. Despite this, it is still difficult to monitor. There is still so much evasion. So remove direct taxes. Thus, it is better to focus on GST. If there is some theft in GST, controlling that will bring in revenue like income tax. However, it's incorrect to say there is no theft in GST. Strengthening control could further boost GST collection. So the income tax revenue will be covered here itself in such a case. Collection cost of direct taxes as percentage of taxes collected are higher. So, the collection cost of direct taxes is higher. The administration cost involved in managing direct taxes is very high. Now, you may be asking why this is the situation. Remember, I previously mentioned that there are more than 8 crore income tax returns are filed, indicating a substantial volume. Okay, but if we talk about GST returns, then nearly around 1.13 crore are filed as on date, right? It might get changed while you watch the video. So 1.13 crore returns are filed. As very few people are filing GST, so the administrative costs will also be low, and more than 8 crore people file income tax returns. Direct tax collection costs more and uses more government resources, while GST has lower costs and higher collection. Direct taxes can control wasteful expenditure only indirectly by taking higher income groups people. So, it is stating that direct taxes cannot control spending. As we know, many people tend to spend wastefully. Can this be controlled? Indirect taxes can help control wasteful spending as the government imposes higher taxes on such items, encouraging people to spend less. So, wasteful expenditure can be controlled, for instance. We know there is a very high tax on alcohol and cigarettes. All this is wasteful expenditure. The government imposes high taxes, so people buy less or stop altogether from spending money on such items. But you already know that a person who is addicted to something might stop eating but won't stop addiction. So think from the government's point of view, don't think about what the public is doing and how they are doing it. The government will not give up on trying. Okay, we can't do anything better. Does that mean we won't try? That's not how it works. Okay? If someone's child goes astray, the father tries his best to correct them, right? No matter if there is any outcome, he won't stop trying, and it is the same thing here too. Okay. The government can levy high taxes on luxury goods, which reduces wasteful expenditure. Goods that are deemed harmful or detrimental are commonly referred to as sin goods. The government imposes high taxes on sin goods and luxury items to reduce wasteful spending, encouraging people to cut back on such purchases. Right? Let's discuss the opposite. Now we will discuss the advantages of direct taxes and the disadvantages of indirect taxes. Both have advantages and disadvantages, which is why both taxes are there. If we say that indirect tax is better, then why are direct taxes being levied? So let's understand what are the advantages of direct tax. This tax is progressive, and that's the best part. We live in a socialist economy and not in a capitalist one. Regardless of wealth of people, heavy taxation is not our system. We are a progressive economy. We are a socialist economy. And here, the tax should be progressive, meaning the rich should pay more taxes and poor should pay less, because everyone should survive. Whereas in indirect taxes, it is not like that. It is regressive in nature. Whoever buys TV will pay the same tax. AC buyers will pay same tax. All will pay same tax on cloth. Okay, but to be honest, let me tell you, our government has made this regressive nature progressive from inside, and I had already told you that the government charges more taxes on the items that are bought by the rich people and things which are usually bought by poor. On them, either we have less or no tax on it at all. So ultimately, as you can notice that the government is taking more tax on things like cars, right? And things like expensive TV, AC and such appliances are charged with more tax by the government. If anything has more tax, generally the rich buy those things, the poor don't buy them. So we can't say that the rich and the poor pay the same tax. However, even the poor pay the same tax, making it regressive. This is its drawback, as both the rich and the poor are taxed equally. But in the inner sense, it is also progressive. Direct taxes do not affect the price. They never have an impact on the price of the goods and services. While indirect taxes raise the prices of goods and service, leading to a decrease in sales, which in turn hampers economic growth. Okay? Lower demand leads to less industrialization. A decrease in market demand can lead to economic collapse, as the country's economy relies heavily on industrialization. Okay, when manufacturing will happen, only then so many companies will run, then those companies will pay their workers, and these workers will be consumers contributing to economy. Direct taxes do not increase the cost of modern machinery and technology. Direct taxes do not impact the prices of the technology of any modern machinery or any technology that we are buying. That would be impacted by indirect tax, as goods and services are also goods. Machinery is also a good. So in some cases, if there is a high tax on machinery, we find things expensive and might decide to stick with our old machines. Using outdated equipment leads to a decline in production. Using the new machine would lead to higher production levels. Production is higher, and when we sell at a competitive rate, then my sales are also higher. my sales would have been higher. So because of this, the entire economy would grow. If our sales were high, we would buy more raw materials. And because of this, the industry we would buy from would grow and boost the entire economy. But because of our use of old machinery, we are holding back the entire economy. We are using the same old machines for production, which is less efficient and has reduced the output and production. Outdated goods are produced but sales are low. So see, neither my personal growth is happening, nor are we able to make society grow. If our sales have decreased, then employees' salary will be reduced. Okay? So there is loss, and also as we are buying fewer goods from the supplier, and this decline in purchases affects the supplier, causing a reduction in his revenue. So understand that it has an impact on the economy. The economy also has an effect on it. This is a cycle. It will have a full impact. So indirect taxes cause these problems, while direct taxes don't lead to inflation as they don't affect machine prices. Inflation is not because of direct taxes but because of indirect taxes. Goods and services become expensive due to taxes, and this leads to inflation. So these are the drawbacks of indirect taxes. They come with disadvantages as well as advantages. Okay. Today in class you learned about direct taxes and about indirect taxes. And we examined the advantages and disadvantages of direct taxes, followed by the advantages and disadvantages of indirect taxes. We will end the class here today and will discuss further in the next class.